Hello everybody and welcome to today's video. In today's video, we are going to take a look at 5 tips for people who are looking to begin trading. Even experienced traders who have been trading for a while can benefit from this video because I'm certain that the kind of tips I'm sharing are not like open a broker account and do this and do that. These are basically tips which I have picked up after years of experience, and so these should be helpful even for experienced traders. I'm very sure most experienced traders also don't incorporate all these points into their trading and investment journey. So this is going to be helpful for beginners as well as experienced traders. That is what we are going to discuss today, the 5 tips. And I really wish that somebody had given me these tips before I started trading, because a lot of these things you learn by making mistakes, and mistakes in trading and investment world are expensive because a mistake means that you had a losing trade, so you lose money. So this is a head start that I can offer to the audience on my channel, that if you're beginning to just getting started with trading or your investment journey, just incorporate these tips into your trading and investment journey, and that will save you a lot of money because you will avoid the most common mistakes and most common pitfalls that people face when they're just getting started. A quick look at the disclaimer before we get started, which basically states that any information that I'm sharing with you in this video is only for entertainment purposes. It is not any kind of trading or investment advice. If you plan to trade with your money or invest your money, please get in touch with a certified financial advisor and understand the risks before trading or investing your money. Just wanted to call out that the trades that I'm taking, I basically post those trades on the community tab of my channel, Serene Trading Strategy. So if you want to actually follow my trades, you can subscribe to my channel and enable the notifications. So what that will do is, whenever I post a trade on the community tab, I create a post, you will immediately get notified, and then you can follow those trades. So most people who share their trades, they basically charge a fee for it. For now, I'm sharing my trades for free, and we also keep a track of the cumulative profit or loss that I have made over the various trades. So if you want to follow the practical trades that I'm taking along with the other videos, the concepts that I discuss in my other videos, you can do that because that really enhances the learning experience. I discuss a lot of concepts and tips in my other videos, but the actual trades that I'm taking is where you will see all those principles, all those concepts in practice. So if you want to receive notifications immediately as soon as I post the trades on my channel, you just need to subscribe to the channel and enable the notifications, because once you've done that, you'll get notified whenever I take a trade and I post it on the community tab. So the first tip that I have for beginners is, and even experienced traders, is that do not trade in very short time frames. Essentially, what I'm trying to say is that day trading is the toughest. To basically become a profitable day trader, it is going to be most difficult. Why? Because you have to be very quick on your feet, and when you're just getting started, you have a lot of doubts, you have a lot of confusion, which you need to spend time to get it clarified. But if you're day trading, you basically have to take trades within seconds, and that opportunity to basically clarify your doubts, to look at the fundamentals again, to look at the technicals again, to look at the charts once again, you will not be able to get. So short term trading, the shorter the time frame, the more pressure cooker trading it is, the more intense it is, and it is definitely not suitable for beginners. If when you're getting started, make sure that you follow longer time frames. If you cannot be a long term investor like Warren Buffett or Manish Pabrai, that is fine, but at least try to get into a swing trading mode where you are okay holding trades for a week, maybe 10 days, 15 days, because in those cases you don't have to take trades immediately. And if you follow my channel and look at my rest of the videos where I have shared a lot of trading examples, most of my trades are swing trades where I hold the trades between somewhere between 2 to 50 days, 60 days. And so the advantage that I have is that I have ample time to analyze before getting into these trades, and then I just put a close order at a certain target price, and I don't really have to be glued to the screen all the time. So that is the real concept about serene trading, that you don't want to, there's no point in trading or working with your investments if it is too stressful for you, because when you work in stress, especially with money, you are bound to make mistakes and you will lose money. So my first recommendation here for people who are getting started, this is what I follow, is do not start with very short time frames. Scalping or day trading sounds very attractive because within minutes you are able to make profits, but just go out there and check the statistics on how many successful day traders are there. And I'm talking about actual traders who make profits consistently over months, over years. It's very easy to be profitable as a day trader for a month, 2 months, 3 months, and unless somebody is showing you their P&L statement, don't trust them, because a lot of people will call out, but unless you can verify their results, or they are renowned personalities in the in the world of finance and investing, do not trust those results. Do your due diligence, because if somebody is that successful as a day trader, I'm very sure that they will get a lot of media attention, and they will have a lot of coverage around them. So unless you're able to verify the P&L statements, please do not trust anybody who's telling you that day trading or scalping can be very, very profitable. I'm not saying that this is not profitable, but it doesn't work for most of the people, because you have to be really quick on your feet, and most beginners cannot just work at that pace. The second thing is learn about money management. This is the most important concept, and I basically can call out one big mistake that people do when they don't follow money management. So you find a very interesting trade, very, very lucrative trade, and there is a very high probability that you will make money on it. So what people will do is they will put 50% of their capital of their trading account balance into one single trade. Now, if the trade goes fine, yes, you'll make a big profit. But what if the trade goes wrong? Then you are going to lose, possibly you're going to lose 50% of your capital, right? Especially if you're doing something with options, or if you're doing it on leverage, you can lose a huge percentage of your account. So one thing that you have to know is that you need to always survive the day and be ready to fight another day. And that requires money management and risk management skills. So more than identifying or learning about any exotic trading strategies like using different technical indicators or different screeners or different formulas, that all is fine, but that is not that important. People who have very, very simple trading strategies but very, very efficient money management and risk management rules, they can still be profitable. But people who have excellent trading strategies with a very high probability of profitable trades and very high risk to reward ratios, they will incur consistent losses if they are not managing their money well. Because you have to understand that if you lose 50% of your account in one trade, then you need to make 100% return to get back your original money. So let's say you started with $100 and you lost 50% of your account. Now you lost $50. If you want to make those $50 back starting with $50, you have to basically double your money. So, money management is one of the most important principles. It is one of the most important concepts that you can learn. And I mean, I have other videos on my channel which discuss about this concept in detail, where I talk about portfolio management and the importance of creating a portfolio. But for now, I can tell you that money management, essentially, in a one line, if I want to state, is do not risk all of your capital on a single trade. Ideally, you should never risk more than 5% of your capital in on a single trade. So if you have $100,000 account, make sure you're not it is not possible for you to lose more than $5,000 on a single trade. Because if you lose $5,000 on a single trade, then rest of your investments can basically help you make back those $5,000. But if you lose something like 40, $50,000 on a single trade, it will be very, very difficult for you to recover that money. The third thing, which is very important, is that you need to learn how to paper trade. Now, why am I saying this? Is because different people use different trading platforms, and when you're getting started, chances are that you do not understand how your trading platform works, and you will enter a wrong trade, or you will work with an assumption that I've placed an order and it is going to execute in a certain way, which will not happen. And this is because different trading platforms work differently. So always make sure that one thing, you understand your trading platform. When you execute a trade, you know exactly what trade you have entered. So your understanding and the what the platform is actually going to execute is exactly the same. The second thing is, when you paper trade, that will allow you to get an experience of the actual trading environment in which you are going to finally trade. Trust me, this will happen to everybody. When you have actual money on the line, there is a lot of nervousness, there is a lot of anxiety, because you don't know if the markets are going to move in your favor or against you. Especially when you're getting started, you're not used to handling that anxiety. So as soon as you're dealing with real money, you want to make sure that you have already practiced those scenarios of executing the trades using paper money or virtual money. So what that will do is it'll reduce your anxiety and nervousness, and make sure that errors or losses which people take because they entered the trades incorrectly, or they did not understand the situation, or let's say a trade went against you and you didn't know how to manage the trade, right? So if you're really invested in with real money, you will panic at that time. But with paper trading, in with virtual money, if you've seen previously the same scenario, then you would have practiced what adjustment or how you need to manage the trades. So that will already be second nature to you. And so even in that pressure situation, even with that nervousness, you will not make any mistakes. So always paper trade, test your strategies, and make sure that you know your trading platform extremely well. I have a complete video on this topic, so I'm going to briefly discuss it here, and I'll leave a link in the description and also in the I button. This recommendation will pop up now, which is a video on buy low and sell high, because this is one very important concept which, if people understand, then half of their trading losses are gone. Imagine a stock which is becoming really popular and it has been going up for the last 6 months. When the stock has been going up such aggressively, what people will do is they will start buying the stock. Why? Because they have a fear of missing out. This is a hot stock, it's going up, but understand, no stock goes up or down in a straight line. Something which has gone up by a huge amount is basically overbought, and over a period of time it has become overvalued. It is in a bubble right now, so sooner or later that valuation will come down to its normal values, and that is the time when you should buy, not at the time when the stock is very very expensive. Because when it comes to stock investing, we basically throw all the common sense logic out of the window. Imagine, when do people shop for things? They shop for things when there is a sale or a discount going on. So people wait for Thanksgiving, people wait for different kinds of sales and discount events to happen before buying stuff. But when it comes to buying stocks, retail investors especially end up buying at the peaks, something which has been going up or getting expensive for the last 6 months. That is when they'll basically buy it, because the expectation is that something which is already expensive will become even more expensive or super expensive in the future. But that is only expectation. The market is not out there to satisfy your expectations and anticipations. You have to take a logical decision. Do I have a higher chance of buying something which is already expensive and hoping it becomes even more expensive, or do I have a higher chance of buying something which is really cheap and then just expecting that it comes to its fair value or even becomes expensive? In my experience, in my opinion, things which are undervalued, which are very very cheap, which are trading at a discount, those are the things which have a chance of coming up to their fair value or even becoming expensive over a period of time. But things which are already very very expensive, which are in a bubble, they are bound to return to their fair value, because eventually the market will realize that these things are overvalued and they will bring them down to their actual intrinsic value. So I'll stop the discussion on this point here, and I'll leave the video in the description where I have discussed this in detail. Please watch that video to understand this point in more detail. The last point that I'm telling here is that follow a trading strategy that works. Do not follow random trading strategies that people are recommending, because half of the trading strategies being recommended out there are only for the purpose of either selling courses or getting views on different platforms like YouTube or social media platforms. But the actual trading strategies that work over the long run are very few. For example, you would have seen a lot of people preaching about value investing. Now, why value investing is popular? Because it actually works. It works slowly, but then it works very nicely over the long run. So if you have a long term time frame, you can actually get into value investing. So look at actual investors, people who have actually managed money and managed that effectively for years together. Always backtest those strategies. Find a trading strategy that works. Don't, first of all, the one basically red mark that you should see, a red signal that you should never follow a strategy which is based solely on technical indicators. Because there are, if you go and see, people are selling hundreds and thousands of technical indicators claiming that this will generate 100% or 500% return. Trust me on this thing and use your common sense that every technical indicator is nothing but a mathematical formula applied to the price and volume. Because there is only two pieces of information, there are only two pieces of information that come out of any stock exchange: price and volume. So you can apply hundreds of different formulas, but essentially you are trying to do an average or some kind of calculation on the same two data sets, price and volume. So these different technical indicators, just because there is a very different formula being applied, it's not going to give you very different information. People make these things sound complex because they want to sell these indicators, but essentially they are giving you no other information, no new information other than the price action or the volume. So use your common sense. Please follow a trading strategy. If you want to follow my trading strategy, you can follow my other videos, because my trading strategy basically involves selling put options on undervalued companies which I want to own, and selling calls on the shares of undervalued companies, or basically at any valuation that I have already purchased. So I'll leave a link in the description where I discuss these strategies in detail, and you can watch that. You have to watch a lot of other videos on my channel, because I have a lot of videos where these different concepts about selling put options and selling call options are discussed along with actual trading examples. So that is why if you basically follow my channel, you will get to learn all these concepts. And along with that, I basically post my live trades, and I discuss a lot of my live trades over videos explaining how I basically got into the trade and what was the reason for me to get into the trade and how it actually turned out to be. So find a trading strategy that works. Do not just believe somebody telling you that this is an excellent trading strategy. Especially, I'm telling you with experience, you do not need to invest a single penny in trading courses or buying technical indicators to start trading and making money on a consistent basis. You may not have the best results, but you can get very basic results without investing any kind of money. So if somebody is asking you to basically buy their indicators to get started with trading, stay away from that. I'm not saying that everybody out there is a scam, but then there is a high chance that you can get the same results or even better results with your own understanding and your own analysis. So I hope this video was useful, and beginning traders as well as experienced traders will find this useful. If you have any comments or suggestions, please leave them down in the comment section and I'll respond to you. If you have any queries, leave them down also in the comment section. And thank you for your time, and I'll catch you guys in the next video.